Good morning, it's Harvey Jackson. Just going to go through the U.S. harvest weather and South America planting and a little bit of the news and weather updates here. Palm oil slides on profit taking and Chicago oil goes with it. You can see here on this slide, it's a little bit complicated with all the colors and again, a colorblind guy shouldn't be touching colors, but anyway. So palm oil has had year over year the biggest increase. China rapeseed has actually had a pretty good increase right here, and European rapeseed has as well. So you can see that the European products are on an increase year over year, and we're trying to leg up here, but you got your canola and soybean oil way down in here that are still negative from a year ago. Oil prices on the crude oil is still in this downward slope and channel, but there is some fears that we could be breaking out to a potential $100 spike, but it wouldn't last very long for the fact that there's a lot of supplies in the world that's trying to supply this that crude oil if the tensions continue in that Middle East area. So weather here, precipitation outlook is below normal, and if you look at where this is, that's where the corn, soybean, and harvest is going to be happening in the next 6 to 10 days. So if you extend it over to the 8 to 14-day outlook, it's still in that area with lower precipitation, but you can see that there's maybe an area over here if there's any harvest left in the 3 to 4 week precipitation. It's going to actually maybe delay over there, but I would expect there would be majority of the harvest will be done by then. Another one that I wanted to point out, and the wife says I should never take pictures because I take terrible pictures. But on the right, I saw some swaths that were moved, and if you can actually see it, that it's maybe 6 to 8 feet tall up against the hydro lines in Saskatchewan there, and the map to the left is actually just showing rain or not rain, wind and the wind levels and how high it is in this area here. So if there's still swaths up there, there still could be some more winds showing up. Not necessarily today, but looking like a few days from now, it's going to start picking up again. Just the last 2 weeks forecast or rain. There was a band in Saskatchewan that got rain, and some in Manitoba as well. But harvest is actually moving along pretty good in a lot of cases. But now the wind is maybe going to do some damage, and it already has. South America, both the GFS and Euro models have rain in the key growing areas of where soybean is going to be planted or is getting planted, and that's what the South American farmer is waiting for, is some of these rains to start happening before they start planting. And it's not too late, of course, either. Once they get these rains, they'll be planting at a pretty rapid pace. Rains in I'm going to say Ukraine, but where there is a deficit, it's here in Russia on some of the key areas for red winter wheat where they're winter planting wheat here. So let's just go through what the market is telling us today. Canola is down. There is just about everything is down here today, except for the crude oil is up a little bit, as I took a picture on this chart. Canadian dollar is basically a little wee bit up, which might help us a little bit there as well. So canola, if we look at the just the near term, it's still following this trend line, and it still needs to beat this previous target here at 621, which is exactly where the 100-day moving average is as well. And the next upside target would be 61.8. There is a 50% retracement, but it's not a Fibonacci retracement, but it is a retracement that should be right in here, which is very similar to where these other values all like there's a hurdle here, hurdle with the 100-day moving average. There's a 50% retracement in there too, but which isn't a Fibonacci retracement, so I just leave it out most cases, because this is probably the more significant because it's actually the Fibonacci retracement value. Rapeseed, it's above the 100-day moving average. It's trying to break out of the channel at the 61.8. So we'll have to see if that can hold. But we've had a little bit of down days, so looking for some support there. So if we look at this chart here, we broke below the 91 difference of rapeseed priced in Canadian dollars minus rapeseed. So rapeseed is still $91 higher value in value over Canadian canola. And if you look at this is a longer term chart here. and you can see that the green line that's on there is 100-day or $100, and like I said, it's not very often that you're trading above the $100. You don't stay there for very long. Now, like I said yesterday, I think we definitely want canola to gain on rapeseed and rapeseed to hold the values that they're currently trading at. So that would mean canola could be going up against that currency or that commodity. Soybean oil following the trend line above the 100-day moving average. Next upside target would be the 61.8. Palm oil is above the 61.8, but just barely because we were having a red day today. But it's got a good looking chart. Yeah. So soybean by itself, sideways channel, choppy up and down. 38.2 retracement is right here, and we need to get above that, which is very close to the 100-day moving average, and you find this is the same kind of trend that we see on a lot of them. But soy meal is above the 100-day moving average and trying to break out of the channel a couple of days ago, but it approached the 61.8 and then failed. Canadian dollar broke the trend, and it's trading below it a little bit. So, and it's approaching the 20-day moving average. So if it fails, it's not a terrible thing for the Canadian farmer. Wheat, right at the 38.2 retracement value and 100-day moving average. So need some of this to hold, but it did make a higher high from that sideways channel that we had currently seen. Spring wheat for next year, you may consider HDAs or futures first contracts at the value. We did jump up to $7. That was my target yesterday, and just putting a retracement on here, I would be looking at the 7.11 to 7.20 as suggested. Somewhere in there. But don't be too greedy. $7 was a pretty good high watermark. We got to take advantage of the carry in this market and use it to our advantage. Wheat above the 100-day moving average, trading right on the 38.2. So this is Chicago wheat, and still in this upward sideways channel. Hard red winter, trading above the 100-day moving average, got to 38.2 and pulled back. So hopefully we can get through there and then look upward from there. Milling wheat actually is right at that 38.2 100-day moving average as well. And coincidentally, if you go back to the short-term chart, it's right at that 78.6 as well. So you got the 78 longer term 38.2. So this is your longer term 38.2, and this is your short term 78. So yeah. So corn trying to break out of the upward channel above the 100-day moving average, but we're having a little bit of a red day, so hopefully we can hold above the 100-day moving average and above this 38.2 retracement. Next Friday or next Thursday, there is a USDA report. We have nothing for Stats Canada until December, and that's all I have for you today.